Welcome back to the Money Remedy. We have an epidemic on our hands. It's called AI fever, and it's infected the entire financial system. We're in the middle of a gold rush, and like every gold rush in history, most miners won't find gold. Most will lose everything. But the people selling the picks and shovels, they're going to get rich. Here's the thing about AI right now. Everyone agrees it's the future. Nobody agrees on the price. And that's where the danger lives. When everybody agrees something is the future, but the price is completely detached from reality, you don't have an investment. You have a fever dream. Today, we're walking through this entire fever dream, from top to bottom, and showing you exactly why this ends the same way every gold rush ends. With most people broke. Before we talk about AI, we need to look at the pattern, because bubbles follow a playbook. Netherlands, tulip mania. People were trading their houses for flowers. Houses for flowers. Then it crashed. .com bubble. Pets.com spent more on marketing than revenue. They went public, they lost everything. Housing crisis. Mortgages rated AAA. Experts said housing never goes down. It did. Millions lost their homes. Cryptocurrency. Bitcoin at $20,000. Everyone thought they'd be millionaires. It crashed 70%. What do these all have in common? At each peak, experts said the same thing. This time is different. The old rules don't apply. And every single time, the old rules did apply. Supply and demand. Profit and loss. Reality always wins. We're about to see that same pattern happen with AI. Patient zero was ChatGPT. November 2022. OpenAI released a chatbot that could talk like a human. It was genuinely incredible. 2 million users in 2 days. Fastest adoption of any consumer product in history. Faster than Facebook, faster than Instagram, faster than TikTok. When something grows that fast, the money shows up. OpenAI raised at a $29 billion valuation. That's impressive, but explainable. Good product, fast growth. Then came the fever. $80 billion. $100 billion. $150 billion. Today, $850 billion. For a company that was worth $0 3 years ago. Did the product get 10 times better? No. Did revenue grow 10 times? No. What happened was collective hallucination. Everyone agreed ChatGPT was valuable. The price just kept climbing because there was more money than patience. Here's the thing. OpenAI is the reasonable valuation in this space. They have revenue. They have customers. But OpenAI is not driving this fever. It's what comes next.
If ChatGPT is worth $850 billion, then the other AI companies must be worth billions? Tens of billions? Anthropic, started in 2021, founded by former OpenAI researchers. By 2025, $400 billion valuation. Less revenue than OpenAI, less users than OpenAI. Half the value? No, same value tier. xAI, founded in 2023. By March, every single founder had left. Elon admitted it needed rebuilding from scratch. $250 billion valuation, still there. Character AI raised money at $5 billion valuation. What do? Chat with fictional characters. That's it. Inflection AI, $5 billion valuation, a chatbot copy with a different personality. Here's what's insane. There are now over 200 AI companies valued at over $1 billion, 200 unicorns. To put that in perspective, there are only about 250 unicorns total in the entire world, across all industries, all technology, all business. And now, 200 of them are AI companies. That's not growth, that's a fever.
Here's what separates a healthy investment from a bubble: the gap between valuation and reality. OpenAI, $850 billion valuation. Revenue, roughly $20 billion. That's a 42x revenue multiple. Amazon trades at 3x revenue. Microsoft trades at 8x revenue. Google trades at 6x revenue. OpenAI trades at 42x. That's already crazy, but it gets worse. Anthropic, $400 billion valuation. Revenue around $2 to $3 billion. That's a 130x multiple, paying $130 for every dollar of annual revenue. XAI, $250 billion valuation. Revenue, $1 billion. That's a 250x multiple. You're paying $250 for every dollar of annual revenue. To compare, Netflix took 20 years to get to 10x revenue multiples. Amazon took 15 years. These AI companies are being priced as if they'll grow revenue 100x in the next 5 years. That's not a forecast, that's fiction. And there's the profitability problem. ChatGPT costs money every time somebody uses it. The more successful it is, the more money it loses. OpenAI spends billions on computing power. They're a loss-making machine wearing a growth story hat. Here's what nobody wants to admit. We don't need 200 AI companies. We probably don't even need 20. If you think logically, the first AI company that figures out how to make this profitable at scale wins. They dominate, second place gets crushed, third place gets cremated. This is a winner-takes-most industry. One company can't have 200 on the same flywheel. At some point, 199 of them hit a wall. But here's what's disturbing. Even the founders know this. They just don't care, because they're not trying to build a profitable company. They're trying to raise money at the highest valuation possible, sell to the next person at a higher price, get out. That's not building a company. That's a greater fool game. And the fools are you, the retail investor, the person with a 401k holding index funds. Because those index funds are buying every AI company at these insane valuations. 199 of these companies will fail, but the money is being raised today. $250 billion. That's how much capital flowed into AI startups in 2024 alone. $250 billion in 1 year to companies with no profits. Where's this money coming from? Venture capital, private equity, pension funds, your retirement account. Here's how it works. A pension fund has to return 8% a year. The stock market returns 10% on average, but that's slow, so they allocate to alternative investments. AI is the hottest alternative. They write a check for $500 million into an AI fund. That fund buys 5% of 20 AI companies, all unprofitable. The fund marks them to market at whatever the last funding round valued them at. Suddenly, on paper, that $500 million is worth $1 billion, 100% returns in a year. The fund manager gets a bonus, the pension fund looks good, everyone's happy. But here's the problem. None of that value is real. It only exists on paper, in the gap between what these companies are worth and what someone is willing to pay right now. And the moment that gap closes, all that value evaporates. But by then, the venture capitalists have cashed out, the fund managers have taken fees, the pension fund has marked it to market, and you're holding the bag. So here's the money remedy diagnosis. We're in a bubble. A genuine textbook bubble that follows every pattern from history. The symptoms are all there.
Everyone agrees it's the future. Prices have zero connection to reality. There's more money than sense. Fundamental metrics are ignored for growth stories. Valuations increasing faster than revenue. This ends the same way every bubble ends, with a crash. When? I don't know. Could be 6 months, could be 2 years, but it will crash. How bad? Look at .com. 80% of internet companies failed. 80%, and the internet was actually valuable. Here's what happens. 1 or 2 AI companies dominate, 20 or 30 survive as second-tier players, 170 plus either collapse or get bought for pennies, investors who bought at peak lose 90+%, the technology itself continues improving, but the stock prices come back to reality. So the remedy isn't don't invest in AI. It's don't buy AI companies at 250x revenue when they're losing billions. That's not investing. That's gambling. Wait for the crash, let the dead weight shake out, then buy the winners at reasonable prices. That's how you actually make money on transformative technology. I'm Dr. Remedy. Subscribe to The Money Remedy. See you next time.